Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, March 20th, 2009. Well, we're seeing a little bit of that continued pullback, I guess you could say, across the board, although it's a very, very minor at this point. And that's something very interesting to pay attention to, because after an 800-point run on the Dow, to really only have the Dow come down maybe 100 points or so, even less considering the Dow is slightly positive while the Nasdaq and the S&P are basically lower on the day, is a very peculiar situation. We need to keep an eye on it to find out whether or not this market is going to then rally off this point or pull back more next week. Now, today's the infamous options expiration officially. So options are expiring today or being exercised on this options expiration. The key to this market, guys, was a line I put in yesterday and the day before for you guys. We've been following this line for multiple days, if not weeks now, going all the way back to about 2 weeks ago. Now, this trend line, you can see I denoted it here in pink, and so it really stands out. And you guys, those of you that watched this video yesterday and the day before, knew we were watching for a break of this, and when we saw a break, we felt the market would go lower. And sure enough, look at this market. And again, I want to scan back a little bit to show you how many times it hit off this line, going back here, even going back further in this market to the 17th, and going all the way back to the 12th. There was a hit of this trend line, and starting all the way back on the 10th. Now, this is very, very important to realize, guys, all right? I can't stress this enough, because when you're dealing with a support line like that, when it finally does break a support line that's been intact for so long, the downside will be a very nice shorting opportunity. Yesterday, we talked about it, and sure enough, it broke, and then look at the sell-off you got in continuation off that point. The SPY down another 79 cents today. That's what we're analyzing here on an intraday 10-minute basis. And what you can see is I've drawn in other trend lines to watch. First of all, I took the high here and drew it lower to the high point from yesterday. So the two highs from yesterday connected it. That's giving me an upper resistance line should we spike up here in the markets and move to that point. In addition, I've also drawn in these lower trend lines, which are more support and resistance lines. And you can see how the market gapped slightly lower here right onto this support line, and then intra-candle pulled back below that line. Whenever you get a gap on a support line or a resistance line and it pulls below it, look for more downside to come. And you can see how the next candle tried to pop back above, the third candle tried to pop back above, and then we saw more selling in this market down just above this secondary support line, another bounce above, then a trend to down to this support line here, and it's been trading sideways. The market, believe it or not, has been very, very quiet today. We have currently Bernanke speaking at 12 o'clock. He started. It's about 12:20 p.m. right now as I do this video live, and you're looking at my support live and resistance levels live as we do this video, folks. You can see the 20 moving average here in yellow is creeping lower. That's going to be resistance as well. I think we should tag that very soon on the upside, and then it's possible that we do see a continued sell-off. The pattern you're developing here in the market could be a bearish in spirit of bear flag intra-candle period here, which could yield a move to this 200 moving average. I do somewhat expect that to get tagged, so keep an eye on that for later today, even though I think in the near term you may see a move up to the 20 and maybe possibly even to this trend line on the upside. Really what you're looking for, again, folks, which is what we've been talking about for multiple days and we were dead on right about, was this pink trend line I had in for multiple videos to you guys, and sure enough, that break working out beautifully. And just look at, as we speak, folks, the market's starting to creep up towards this 20 moving average, as we just mentioned that it probably would do that. So watch for that, folks. That's a good indicator for a possible move into resistance. If it gets through that, then you're going to have a nice little move into this level, which currently standing around, I don't know, around 78.65 to 75 in this range up here if you get through that. But I think this 20 moving average near term will work as a little bit of resistance. We are tagging it right now as we speak. All right, and again, I do these videos for you guys out there, the free viewers. We also have a premium service on our website called the Research Center. We give out educational videos, educational advice. We give out guidance using trend line analysis, price pattern and timing, all this stuff we use, obviously, to give you guys an idea in these free videos what our premium subscribers get for on a nightly, daily, intraday basis throughout the day. We also have the chat room, obviously, with live video. That's fantastic, folks. It's been a phenomenal week this week in the chat room with the live video. All right, so you can see we closed right on the 20 moving average here intraday. The other thing I want to mention before I go into more analysis, folks, is we have a webinar teaching our hardcore proprietary things tomorrow. You're going to learn how to do candlestick analysis, bear flag in spirit of bear flag, bull flag in spirit of bull flag, MA patterns, WV patterns. Those are all standard stuff. Then we're going to go into some of our proprietary indicators. How do you know when a trend line is going to break down? What calculations can you make to tell you that this is going to be the time when the trend line will break? And all this kind of stuff you will learn in this webinar. So sign up on our website under Education Seminars and Webinars. You can find it very easily. Now, looking at this candle, folks, you can see it's starting to sell off a little bit. We'll check back on that in a short amount of time, but I really want to go to the 60-minute and touch on this. This market, this is what I talked about in the beginning of the video. This market on a pullback basis has not really pulled back much. You're really talking about an extended move from basically $67 on the SPY to a high of about, I don't know, about 81 on the SPY, and all you've pulled back here is about $2 of that move or so. So a very, very impressive hold in this market, as you would think the market would sell off more, but for the most part, it's not. It's holding steady. What we are seeing a sell-off in is the financials. Now, ideally, folks, I think this market will sell off next week a little bit, but I'm not going to go into more than that. I'm not going to tell you my key levels, obviously, going into this for next week. That's for the premium subscribers to know so they can trade it accordingly, whether they're doing their 401ks, IRAs, or individual investment accounts or trading accounts. All that information will be available to them in tonight's video in the Research Center. Now, what you're watching for here on an intraday basis, folks, a possibility of a bear flag pattern could be developing on this SPY, and I'll show you that pattern. You're getting the first candle here, and again, it needs more candles, and you want to ideally stay right along this 220 moving average. Should that happen into the close today, you could get a little bit of a dip, maybe into that 200 on the intraday that I talked about right down here. All right, I still think there's a high probability we tag this at some point either today or early Monday. Now, going back to the 60-minute, you can see, again, the extension move, and there were multiple patterns here. You can see this little bit of a W pattern developed, and this, again, is why we had turned to a bullish side. And those of you that were with us back here, we were buying the FAS in the chat room. We were buying the FAS, and we told our premium subscribers we were loading the boat here on the FAS. That's 3 times long financials. We got a beautiful move up, and then right around here, we started to accumulate the FAZ, got a beautiful move down, and I have closed out 99% of that FAZ at this point. On a nice little gain on that stock, that ETF trading as high as 34 and change today. Beautiful move from a low yesterday of like 24. Unbelievable. That thing is a wild trading stock and really, really risky. In any case, nice little move up again. You guys are seeing a little bit of a pop here on the 60-minute. I'm still watching for that bearish flag pattern, but look at the pullbacks you've seen in the financials. Bank of America, that's a nice solid drop. Where's it going? To the 50 moving average. You got to know your moving averages. Which ones are the key ones? How do you know when a moving average has been hit multiple times, and when is it going to break that moving average? That's all things you need to know. Wells Fargo, nice sell-off again today. Where's it bouncing? 50 moving average. Boom. And Citigroup today bucking the trend, up 8 cents, but a nice sell-off from the highs yesterday. Got as high as almost just under $4 yesterday, and now trading in the mid 260s level, right around 267, 268 right now. Goldman as well, beautiful sell-off, although finding support again right at the 50 moving average. You got to know your moving average hits, guys, because there's reasons why a moving average breaks, and there's a reason why it holds. It has a lot of factors to do with calculating how many certain amount of various hits it's had and so forth. That's all stuff we'll teach in the webinar. Nick, our chief market strategist, handles that webinar. And again, you follow all the screens live, all the slides live with him while you're on a 1-800 number with him, dealing on a very small. We keep the webinars generally small. It's not 100 people by any stretch. All right, we try to limit it so you have access to him and can ask all your questions on the market and on technical analysis. So we hope to have you with us. Come join the premium services on our website as always, and thank you all for watching these videos. Take care.